Good afternoon. This is Craig Model Mug on Monday, July 6th. Hope everyone had a good 4th of July. And for this week's, actually it's last week's, but it was Friday, markets were closed, my kids were in town, so I delayed it till Monday. I guess you can call that whatever you want. Laziness, enjoying your family. I'm opting for that one. But anyway, today is Monday, July 6th, and this is Wall Street X's and O's for this week. I hope everyone's doing great. To kick things off here, just from a standpoint, all of the opinions, facts, details on this show are mine. They are not a offer or a solicitation to buy or sell anything. Investments can and will lose money, and now I have covered my bases. So anyway, I hope everyone's doing great. It's doing really great. I had a great weekend. Like I said, my kids were in town last week. It was good having them around. Got to play golf with my son on Saturday morning. We went and hacked. First time I played golf in over 10 years. It looked like it. We had a blast. And like I said, my daughter was home as well, and it was just a good time. I hope everyone had really great time with their family. But to kick things off here, periodically I get feedback from you guys, and I love it. Good, bad, or indifferent, okay? First one, I have been called out on pounding the table because it sounds like a shock going through your ears when it comes through. I agree. So I am really going to work hard on not banging the table just because I'm so passionate in my delivery. So that's one thing. So I appreciate the feedback sincerely because I really want to make this good and really want this to be a good thing. So anyway, so that is good. Secondly, I had another client send me an email, and he had this, I'm going to call this fun facts. There's a song, things that make you go, 80s song. Anyway, if you're an 80s person, get back with me with who sang that song. Interesting. Anyway, here's the question. This is the stumper, okay? Do you know where the ear of the male cricket is located? I'm hearing crickets right now. Did you know? It's not commonly known. I did not know this. I mean, how could I? I'm not a specialist in crickets. But anyway, the ear of the male cricket is located in their tibia. So this is where I'm going with this. All you guys, if you're married, if you're not married. So if your wife or your mom says, hey, did you just hear what I said? And you're like going, what? And they'll be like, what, are you deaf? And you'll say, no, my ears are in my legs. I know that's a stretch. It's Monday. What can I say? You know, uncut, unedited. The jokes just sometimes are bad, but that's what I got. So anyway, we're going to dive in here. We're going to really focus to kick things off on business cycles, on inflation, and on the ISM manufacturing data. The first things first, I've got some great data here from the, oh man, and I deleted my deal. It's the National Bureau of Economic Development, okay? I thought I couldn't remember it, so I had my cheat sheet up here on my screen, and I actually remembered it. Here's some interesting facts, fun facts, okay? On average, if you go back and look at recessions back to the Great Depression, okay, the average business cycle duration is 11 months with a minimum duration of 7 months and a maximum duration of 44 months, okay? The average, again, is 11, all right? We are only a couple months into this deal. So I think, you know, when you look at this downturn in relationship to economic history as kind of our backstop, this kind of overestimation of a V-shaped recovery, I think may be a little bit of a stretch. But as you know, I'm a big fact guy, and I just thought that was interesting. So that's every recession back to the Depression. Shortest time, 7 months, longest 44 months, ouch, average 11. We're going to see. It's going to be interesting. Inflation has really been rearing its head. You've got a federal government really trying to devalue our dollar, okay? They pumped so much money into the system that it's really forcing the dollar down, okay? Where do we see that? Number one, CRB Commodities Index increased by 4.6 last week, remains in a very strong bullish trend. Oil was up another 5.6% for the week, of which, and that's post oil collapse that we saw back in March. Copper has been on a rip and roar and tear, up another 2.6% for the week. Corn, soybeans, wheat, cattle, any of your ag up big. Corn was up 7.6 on the week. Today you've got precious metals or rare earth metals that are up big on the day, up over 2%. Lumber prices up another 3.4%. And they're up 55.3 in the last 3 months alone. Whoa, what are you thinking about people building houses? Are things going to get more expensive? Probably, okay. I remain very bullish on commodities at this point in time, of which I have not been for a decade. Commodities have been a place to avoid like the plague. Why? Strong dollar, inflation non-existent. Now that we have weak dollar, ooh, wow, I about made a very obscene hand gesture there. Now that we have weak dollar, see, I had to restate that, and we have inflation going up, we have the inverse of that. So commodities are really starting to show some life here, okay? If we get to ISM manufacturing numbers, first of all, what is that? Good question, Craig. Well, what it is, it can also be called the Purchasing Managers Index. What it really focuses on, it's an activity-based monthly survey that's passed out to over 300 different manufacturing firms, and it really focuses on manufacturing activity. So when you have an ISM number that is up or elevated north of 50, that means things are in expansion mode. If you have it less than 50, things are in contraction mode. Last week we had a huge recovery from the last couple weeks where ISM now is at 52.6. Don't get all excited. Things haven't changed that much. We're just seeing a bounce, okay? The thing I'm worried about is you're seeing we had this huge contraction, which was a drop off the cliff. Now we're seeing the reaction to that, okay? Every action has an equal and opposite reaction. Physics, you remember that? Many of you may have not paid attention that day in physics. That is actually one of those main physics topics, okay? So we're seeing this rebound. The kicker is sustainability. A lot of it, I think, was due to the reopening of the economy from COVID. Now we're seeing the closing again, of which I'm going to be very anxious to see how that continues to materialize, not just in manufacturing, but obviously getting into jobs claims, which you knew I couldn't help myself. I've got to get to unemployment claims. Last week we had unemployment claims again of 1.247 million. The consensus is 1.38. So again, we had more claims than anticipated. It was the 13th straight decline in the labor markets, bringing the total cumulative jobs lost to 48.7 million jobs. What I find interesting is the continued claims for unemployment benefits right now are at 19.29 million. If you add into that a lot of your PUA claims on a weekly basis, which that's the pandemic unemployment assistance, that kicks you at basically north of 21. If you factor in continued claims on PUA, as well as some of there's one other kind of random unemployment assistance that's out there. You're talking north of 30 million people on reoccurring unemployment, which is basically 1 in 4, 1 in 5 Americans, okay? What I'm anxious to watch coming weeks is this. I got hit the table, I held off. I'm trying to relax here because I don't want to get fired up and start banging on the table. Here's what I'm watching for in the coming weeks. We have restaurants, we have bars being closed down again. We've got hot spots, Florida, Texas, Arizona, other places around the country that are starting to close back down. I'm anxious to see what employment numbers continue to look like, okay? Because as they close down, obviously they are not going to be maintaining employment. The PPP, which was loans for small businesses to keep people employed, that runs out here soon. I think they pushed it off another month to the end of August, if I'm not mistaken. So I'm anxious as the spigots turn off, how that's going to impact our business owners. I know being a business owner, talking to friends that are business owners, and their big challenge is they start to reopen. They can't reopen at full capacity from an employment standpoint because they don't have the business to drive it. That's going to be kind of that tipping scale or that tipping point that we're going to be watching. So keep your eyes peeled on that, okay? Looking to the Fed. Remember when I said about 10 days ago on my last Friday, where I talked about the Fed starting to buy individual corporate bond issues? Oh, you remember. Here's what I have found out, okay? And this gets good. This is so good. Last week, Fed Chairman Powell was grilled by the Senate committee, okay? They were hammering on him, and they were hitting him from all different sides. And he was saying, to try to avoid criticism, they were going to start buying individual issues relative to your major bond market indexes. They are really focusing, trying to on equality. Okay, they focused on consumer product companies such as Quaker Oats, Distillers Brown Forman. They make Jack Daniels. I've got a couple of friends that work for Jack Daniels. Woodford Reserve whiskeys they also make. They were also focusing on utilities, energy firms. This gets interesting, okay? So they bought companies like that in addition to Nike, Broadcaster Fox Corp, PayPal, Target, Campbell Soup, chipmaker Broadcom. Here were their top 6 purchases. Am I reading something into this? Yes and no. You're going to have to stay tuned for Friday's numbers, and we'll see what else did they buy. Here were the top 6 companies they bought: Toyota, Volkswagen, Daimler Chrysler, AT&T, Apple, and Verizon. Those companies make up 10% of the index, okay? So basically what the Fed is committed to from a standpoint of backstopping the economy with Fed taxpayer money, let me remind you of that here. They pledged $750 billion in this emergency lending program. Don't you like that? I wish I had an emergency lending program. I do not, personally. As of June 16th, they have bought $6.8 billion in corporate bond ETFs. This included $1.7 billion worth of the iShares iBox US dollar investment grade corporate bond ETF, LQD, and also corporate credit facilities was another $8.7 billion through June 24. So basically, they're about 10% through this. Okay, so they pledged $750 billion. They have currently purchased $7.5 billion. Very interesting. It's going to be interesting to watch this. Jeffrey Gundlach, he is the founder and CEO of DoubleLine. He's been a big complainer about this, and I'll call it a huge critic, because he's talking about how the Fed is basically throwing everything, including the kitchen sink, at the economy, trying to prop it up, trying to remove volatility. He really thinks all this is doing is it's delaying the volatility, where they can only backstop it for so long. What he's concerned, if we do have this phase 2 of the pandemic, more outbreaks nationally, which it wouldn't shock me if we did, how are they going to handle that going forward? That is really going to be the question of the hour. I think as the lockdowns have wreaked havoc and continue to, I guess desperate times require desperate measures. I would argue that if you look at the Federal Reserve Act of 1913, it really doesn't give the Federal Reserve the ability to buy anything outside of government treasuries and mortgage-backed securities. So I find it interesting how they're trying to spin in here buying corporate debt. If things got really bad, it wouldn't shock me to see them start to buying equities. I know you probably think you're hearing it here first. You haven't. It's happening in Japan for decades. It's happening all over the place. Okay, European Union's been doing it. Is it working? No, it's not. So it gets me a little bit concerned on how that is going to be addressed going forwards. Okay, moving on here. I read another really interesting article, and they talked about the NASDAQ 100 being up north of 30% over the past year, while the continued jobless claims have soared to record highs, obviously as a result of the pandemic. What is interesting is in his chart, he goes back to 2000 and charts the continued jobless claims versus the NASDAQ 100 index. What is really fascinating is they track each other very closely. going back to 2000. And again, is this something you really put a lot into? No, thought it was interesting, so I'm throwing it out there. What I find interesting is you have seen the NASDAQ sell off in March. You've seen a massive rebound where we're setting new highs. But the problem is we've got millions and millions of people that are on continued jobless claims. Okay, I personally worry about the jobs that are gone forever, because I think there are millions of jobs, which there are during every recession, that go away, and it takes time to replenish. Okay, it's going to be interesting to see how the economy handles everything that's going on, because obviously they're not paying attention to a lot of what I feel are very key indicators that are real grassroots. See, I about hit the table again. I got to relax. Okay, I got to relax here. When you focus on the key economic indicators that drive the markets on a daily basis, which is what I continue to focus on with you guys, that don't get discussed on a daily basis, if at all, there's a massive disconnect when you get to what is happening in the markets versus what is happening in the economy. And it concerns me. Okay, I'm not going to lie to you. Could the markets continue to go upwards? They really could. The higher they go, the probability of another big exhale in the market grows, though. Okay, I continue to be very cautious, as most of you know, and that is not going to change as I get ready to close out here today. I really focus on facts. I found a great quote from Marcus Aurelius. He was a Roman emperor from AD 161 through 180. And he had this fantastic quote about, and now where did my quote go? Oh my gosh. See, I told you this was uncut and unedited. That's amazing. I had such a great quote that I wrote down. Now I can't find it. Anyway, he had a real quote basically on the truth. And if you don't know the truth, you should keep your mouth shut. Okay? And that is the problem we get to today. Being politically agnostic on this comment, I get concerned about what the media reports, what politicians on either side of the aisle here report. Okay? To me, if it's not the facts relative to the economy and economics and things that make our world go, you really should not speak them. Okay, you have all these fact checkers out there on both sides. I find it interesting how many people, and obviously we're getting in the political season on all the elections coming up in November. I find it interesting how every time a politician has something and they run an advertisement or something, how they get fact checked, and half the time it's wrong, or part of the message is wrong. I don't understand that. But again, I want to help you guys focus on, number one, the facts. I want you to also help you focus on, two, being unemotional. We have to make unemotional, factual decisions when it comes to our investments and our money. Okay? I appreciate you guys every week. It is a pleasure and an honor to get in front of you all. And I will continue to work hard to dig for the facts and to inform and educate you on what's going on and how that is going to impact you and your hard-earned dollars as we move forwards into the rest of 2020. For Monday, I almost said Friday, see, but it's only Monday. For Monday, June 6th, 2020, this is Craig Modelmog for this week's, wow, it is Monday, isn't it? For this week's episode of Wall Street X's and O's, and I am out.